What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So another intense week of volatility, punctuated by a sharp sell-off on Friday. Not too surprising given the high amount of uncertainty for most traders to want to stay in positions over the weekend. So pretty common there. That said, this week action felt a bit different to me, and in a good way, I might add. More on my thoughts around that later. With the earnings report on ChargePoint coming at the end of the month, I figured it would be good to quickly touch on what they've been up to. The last time I covered them, I told you that I thought the stock had bottomed on February 24th, and we would absolutely trend to $17. Well, I was partially right. The stock got as high as $20.69 in the following weeks, but it did reverse from there, making a new all-time low of $8.50 before bouncing back to the current price of $11.02. So, great example of why you shouldn't take this as financial advice. I'm not a financial advisor, but rather you should look at this as an input into your own investment thesis as I share my thought process with you. So in today's videos, I'll touch on new partnerships that ChargePoint is now capitalizing on, go over where analyst ratings are ahead of the earning call, and give you my thoughts on where I believe we're heading in light of the stock market action this week. As always, I recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop the video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. So during the last earnings reports, we saw the expanding list of clients ChargePoint is servicing and became aware that they now provide charging solutions for more than 50% of SP 500 companies. As I was prepping for today's video, I remembered seeing this article here. I think it's a good showcase of the growing interest for EV infrastructure, but also how ChargePoint is able to continue expanding its customer base, as it is viewed as a primary choice for companies looking to be more EV friendly. As it turns out, Volvo and Starbucks are the latest two companies to kick off a pilot program. The intent here is to research the usage and potential scalability of electric vehicle chargers at Starbucks stores for future nationwide deployment. But for now, the pilot kicks off this summer with the plan to install up to 60 Volvo branded DC charger, of course supplied by ChargePoint. These chargers will be set up roughly every 100 miles at up to 15 Starbucks locations between Denver, Colorado, and their headquarters in Seattle. Great initiative if you ask me, and sets the stage for a broader fast charging network alongside the Tesla supercharger network. I expect we'll hear more details around this expansion, increased adoption, and the resulting growing revenue streams during the next earning call. And if you recall, ChargePoint gave a monster forward guidance for this year between $450 million to potentially as high as $500 million for revenue. We'll see if they're on track to meet or exceed this guidance. Now, as of this Friday close, the consensus analyst price target for ChargePoint is still $24.58, which is good for 123% upside. Now, that's more than a cool double return on investment, right? So can't be mad at that. High-end projections comes in at $34, and the low end of the spectrum is at $16. So as it stands, the range is anywhere between 50% return on investment to triple that, which is pretty massive and bodes well for long-term investors. We have 12 ratings with 9 buys, 3 holds, and 0 sell. Again, 0 sell. And they're giving you a not-so-subtle hint with the strong buy highlighted as your consensus rating. Something to think about. Now, to circle back as to why this week's decline in market was different in a good way, with the gradual increase in the Fed funds interest rates, seeing long-duration, non-profitable assets like ChargePoint take a hit is to be expected. That's why the Nasdaq, home to tech and growth stocks, has been in a bear market since late April, and now year-to-date is sitting on a 27.42% decline. Bitcoin has corrected by over 50%, with the current price of, call it $29K, the fear and greed index is in extreme fear territory. But here's what the vast majority of investors, myself included, have been waiting for. For the first time since the re-rating of multiples used to set stock prices started, the SP 500 briefly crossed into bear market territory with a greater than 20% correction on Friday before recovering. Now, the relevance here is that people in the market at large are finally accepting that capitulation is needed to reset all valuation and build back up from there. I've said before that this doesn't end until the SP 500 also enters a bear market, and all the hiding spots where institutional investors would typically rotate to for near-term cover also get beat up. Well, we get some of that this week with Walmart and Target selling off along with other consumer staples. But again, as I said, we bounced back. Now, for people to stop chickening out and fully follow through, the only thing missing, well, it's a solid catalyst to generate a nice headline story to justify a massive indiscriminate sell-off for capitulation to actually occur. One such event could be the balance sheet reduction by the Fed starting in June, so keep an eye out for that. The last thing I will say is this for some perspective. ChargePoint is now trading virtually in the same range it was pre-pandemic and before its SPAC merger announcement. Investors are getting an opportunity to enter on the ground floor for a company that is rapidly growing revenue, expanding its global footprint, and expected to reach profitability by mid-decade. Not that far away if you really think about it. Again, just my perspective, but this is the time I would be loading up on shares while remembering to keep a bit of cash on the sideline in preparation for market-wide capitulation. Now, taking this a step further, don't forget that in March of 2020, when valuations were reset because people thought the world was ending, the smart investors who recognized that moment as nothing more than a point in time and invested saw double-digit to triple-digit returns in 2020 and in 2021. ChargePoint in my mind is giving investors that same opportunity once again with a lot less risk from a fundamental standpoint, and that's precisely why I'm still a buyer here. With that, keeping it short and sweet, and that's where I'll leave it for today. Don't forget to drop this video a like if it helped you gain a new perspective, and share with others who you believe could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. As a reminder, I post every Sunday. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.